So now before we turn to exports, again, just trying to remind you to please subscribe, like, share. We'd like to keep this free, so your support is welcomed. And now that we've covered that something that we're going to have to say multiple times, unfortunately, just to keep it in front of everyone's, in front of their minds, helping people move us along. But now that we turn to exports, you can see that gasoline demand exports fell by 169,000 barrels a day, distillate 372,000. Again, it's something that we think is going to be fairly consistent. Gasoline should see a little bit of a spike just because some of the gasoline demand has been fairly beneficial when we look at the Latin American markets. It's distillate that we remain concerned. We've been talking about it in terms of just where we go from the U.S. to Europe, additional competition coming in as we have slowing demand within the European nations, which is just going to be a headwind for total distillate exports over the coming weeks. Jet fuel, not much to say. Propane is the one where as we said last week, we expected a rebound. It's always going to be timing. Now with Hurricane Zeta coming through, some of these will be a little wonky when we think about what does next week look like. But that's why when we look at overall, when we go into what is November, what does December look like, we remain concerned about total distillate demand and distillate exports. But also when we look at total crude exports, we did get a big spike. We were expecting a move back in terms of overall exports. Instead, we had a big move up of about 424,000 barrels, getting to almost 3.5 million barrels a day. Alaska is the delta in what we were seeing. There was a big spike in exports from Alaska into the international market, specifically China. And that's one that will remain fairly robust, especially when you consider what is happening in China. So China has some additional refining coming on. They've actually decided to go ahead with a new independent refiner that is supported by the Shandong province, which is about 400,000 barrels a day. That's just new construction, so it's not like we're going to see that in demand numbers. But a lot of the new capacity in China has coking, has complexity, and Alaska is a 29.6% API, 29.6 API, which again is just a very strong blend for that type of refiner. So those we'll see, especially coming off the northern slope, we'll see some of those benefits going over. We still think that exports push to the downside. At this point, just in terms of Zeta getting in the way and additional impacts, we think that it'll normalize closer to that 2.8, 2.7, 2.8. But it comes down to spreads as we see Brent LLS at only 3 cents wide. We see, again, just in terms of moving new product, new movements will just remain problematic as we fill some of the additional cargoes that have been purchased. South Korea has purchased for December, January. We do have new Chinese purchases for December, January, and we do have some spec buying ahead of teapots. So the idea is that you'll get, so far we haven't gotten new import quotas. You do have some speculative buying that did tighten Brent spreads on Friday. We did see Oman spreads and some other Middle Eastern spreads get a little bit tighter, and now that's starting to loosen up. Again, just a matter of Libya coming in, where some of those different flows are. As we've been talking, this just came out, 10 super tankers are scheduled to load mostly North Sea and Johan Sverdrup in Norway. And again, a lot of that pressure there in those builds are speculative for additional buying in China, which we'll talk about in a bit more detail on why we think it'll be a little difficult to see additional buying, especially as we have Western African grades continuing to kind of bleed into the market. November is going to be slow. As most refiners have already bought November. So what we're going to be talking about is more December, January, and February as we go through the remainder of the year and into the start of the new year. As we said with exports, they were going to fall below the 9-year average. They'll spike a little bit just as guys pull through ahead of the hurricane. Nothing really to be said. It's just going to kind of hold along that average. We think it'll hold on over the next few weeks. It'll hold just above the 9-year average as we do see some additional demand going into Mexico and some other Latin American countries, which will be a benefit for gasoline overall. And as we said with distillate, we thought we were going to get a big drop to the downside, and we thought it was going to get to still stay within the cloud, but come to the lower end. You can see it fell through, setting a new seasonal low, but when you look at it, exports are always lumpy, so it's not much to consider one way or the other. This will bounce back into that cloud, but as we've been saying, we think it's just going to be lower highs and lower lows, and it'll stay below the 9-year average with additional pressure coming through as we have less demand as we look at Europe. What is Europe going to demand? What is European PMI flows? And those have fallen under pressure. Manufacturing actually remains fairly strong. That will change just as lockdowns increase. But the service sector remains the problem as we go forward. And then, as we've been talking, some VLCCs for Libyan crude have just been announced. So again, Libya continues to be a stalwart in getting back and active. Our view was in 390,000 barrels by end of October. They're at about 560,000 with the ability, based on the NOC comments, to get to about 1 million within the next 4 weeks. So that's going to be something to watch. And as we go through in the Turkey show and the Mediterranean show, their largest buyers are typically Italy and Spain. And Italy and Spain have cut runs. There's going to be additional pressure, which is going to move those cargoes. Most likely, they're going to try to get it into Asia at this point in time. Another bright spot, Fujairah. Fujairah distillates dropped to essentially this gap between 2018 and 2017. When you look at 2017, we're following the same trajectory, especially based on slope, as we have a big. We did see an increase in total ships in the market, which is going to pull through more MGO, and we did have a reduction in total refining throughput. In terms of where it sits, where it's in storage. A lot of that has been exported. We're going to talk about Russian diesel flow overall, just to give you an idea of what Russia's doing, what Saudi's doing. Now we're actually seeing the reverse, where we're seeing an increase in activity within the Middle East. Now, I'm not saying that as a bearish thing, because on a seasonal norm, that's usually what happens. We do see an increase in refinery activity, and this will start to move this back within kind of that stability level, where we don't think it's just going to continue to drop, but we also don't think that we're going to see big builds, which is something that's going to hold sideways, which remains a fairly strong bright spot. The question is going to be, where does Singapore go? Where does India and China go? And then how does Europe factor in, which is something that we're going to cover. As we look at total Fujairah stockpiles, the total stockpile is 13-month low. You can see that it's pretty much across the board, with middle distillate, light distillate, all of it remaining and coming down. Heavy resid should stay relatively flat, just given the demand cycles. But the positive to see is light and specifically middle, as we see some of that normalization. You can see that when we look at it versus versus 19, again, still remains strong. The trajectory, just based on what we're seeing, we'll keep seeing draws, but Singapore continues to build, build in some areas and fairly stable to flat in others, with China remaining the bigger problem, even though India has increased runs, which we'll talk about in a few minutes. Japan crude inventory, we're right at 2018 levels. There's not much to say one way or the other. It's something that's going to be fairly lumpy, but just based on refined activity, it's not something that we think is going to be. We're not going to see a big move up or down. The likelihood, just based on what we're seeing, what we're hearing, it's going to trend below 2018. Like, we're not going to see the huge spike unless they start to take advantage of some of these pricing components, and we see some of the spec buying, and maybe there starts to be some softness and some movement in spot cargoes that remain out there. But right now, we're not going to see this 2019 drop. We're not going to see this 2018 rally. It's just going to be a sideways move as some of Japan starts to digest. As again, when we look at shipping, when we look at production, when we look at manufacturing, it remains a lot of headwinds and negative versus 2019, which is why when we look at 2019, 2018, sideways is the answer. When we look at total floating storage, as we said over the last couple of weeks, we're going to start to see an increase in floating storage, but it's a problem as to where the floating storage is happening. And when we look at the last 7 days, it fell to 140.2 million barrels when we look at just where we sit. So it's down week over week, but it's fairly stable over the last 4 weeks. And then when we look at what is that down versus October 16th, it's down 7.4%. We see that starting to not so much increase, but hold the 150 line as we see additional increases in Europe, the North Sea. And then the one to watch is going to be the Middle East and West Africa, as Asia is one where we don't think it's going to continue to build just because India is a bright spot. We see India pulling down additional floating storage, but China onshore storage remains flooded. It's going to be a matter of how quickly can China pull some of those cargoes in. So Asia is going to be fairly stable overall. Just to give you a breakdown, the one we did get a drop in Asia Pacific of 12% week over week. Europe was down 33% week over week. Middle East was up 56%. West Africa was up 143%. North Sea was down 48%. Again, the percentages sound big, but again, it's just because the whole numbers just are fairly low numbers overall. But we'll go through each one piece by piece just to give you an idea of what we're seeing, what we're expecting. The Venezuelan glut continued. This is something when we talked about what Rosneft is doing, how are they going to get additional flows? There's going to be additional inventories building in Venezuela just as sanctions increase. Some of their buyers have gone away, specifically China. Overall, China has opted to not take some of these cargoes, same with India. So Russia expects to produce about 507 million tons of crude oil and condensate this year compared to initial plans of 558 to 560. So that is those impacts from the OPEC cuts. The question is going to be what happens in January, because the expectation was for an increase of 2 million barrels, which again, we don't think is going to happen. They're going to have to account for Libya coming back. Oman crude, a key Middle Eastern grade, as we talked about, the regional benchmark, it did go up last week as some of these Chinese companies were trying to get in front of a demand surge that they're expecting in January. Again, that's one that we think that there will be an increase in January purchases, obviously, especially for delivery in January. It's just it won't be as robust as the market is expecting as, again, the floating storage, onshore storage, as refinery runs continue to remain under pressure, specifically at the state-owned asset level. When we look at Petrobras, they reduced runs versus September. But when we look, they reduced runs in September versus October, but you can see they're still well above the lockdown level and kind of where things are. Again, we think it's going to be fairly strong. Petrobras, there's nothing to say that there's going to be any change in processing, which will be a little bit of a headwind for gasoline and distillate exports into Latin America. But just based on our natural flow, this shouldn't impact us too much, and we should still see some fairly strong, or at least recover of some exports, and specifically gasoline, into the floating, the Latin American market. When we look at Shandong Independent Refiner crude storage, again, it's just sideways. It remains very strong, very elevated. You can look at it against the seasonal norms. Typically, we do get a drop down as we get refinery runs increasing, guys looking to build up for the heating demand. And again, it's just as soon as they run it, they're pulling it off the floating storage, and then it's going right into onshore. But we do get some timing delays. We do have an increase in floating storage, or I should say the quick replacement of floating storage, which is keeping things elevated across the board. The one benefit, and this is something that's counter to some of the things that we've heard, was independent refinery utilization rates. So what we've been hearing, what has been expected, has been a shift from about 75% to about 69%, 70%. And instead, you see actually a small increase to 74%. So this is one where they're just trying to work through some of that onshore storage, floating storage sitting out there. The issue is going to be, they've either met or are getting close to meeting their export quotas. They are about 10% away from hitting their import quotas. So the question is going to be how much is delayed or deferred into January. as we get a renewed resurgence. But again, this is some positive in terms of some of the cycle through. But now, while we're seeing this increase on the independent side, when we shift to the state-owned side, the state-owned enterprises have actually seen a relatively large decline, and they're averaging now about 79%. This is the breakdown overall. Based on what we're seeing here, it's probably closer to about 75% when we think about where the overall activity. So even though the refinery run rates have been fairly strong on the independent side, they've fallen under some pressure at the state-owned side, which comes to where are we seeing a lot of these pulls. We did have 70 million barrels of new commercial store, or I should say, commercial storage, or at least SPR storage in China, which, depending on the state-owned, it is commercial for them. So that has also helped pull through from floating onshore. But again, the problem is going to be, where does this go overall, especially as we see floating storage and just context in the industry saying that they still remain fairly oversupplied when we look at the onshore side, and it's reflected in the floating side as well. Russia diesel output. So the one thing that we want to look at is as oil exports go down, or as we see some declines, like if you look at the loading schedules for November out of Russia, they are down month over month. But here you can see we have gotten a big increase in diesel output. So the question is, are they decreasing the overall oil exports and increasing refinery throughput? You can see that they normally have a big spike. So this is not something to say, oh, look, clearly there's indication. It's still within a confidence range on the 5-year average. It's just one that we think is going to remain elevated as we go through the remainder of the year, not only because they want to get it into the market, but the idea is they also have falling demand locally. So that's going to just put more into the market as they've rolled out a declaration on masks being required everywhere. And they're also experiencing their own resurgence in COVID, which is restricting total movements overall. Crude oil on the water on total is now back below the 5-year average, and is back below that level of, and when we look at the cloud overall, which is an inherent positive as more oil gets pulled out of the market. Again, this is starting to increase up, but we normally see increases now, so it's not something that should be surprising. The question is going to be, this doesn't pick up the full Libyan crude. This doesn't pick up some of the increases that we've seen in the North Sea and Europe. So the question is going to be how quickly do we get this spike? And we do have a cut in total runs, which would also decrease the amount of crude oil that's demanded, putting it on the water. But this is also increasing to oil in transit, and clearly oil in transit has gone down because oil in floating storage has been really fairly flat. So that should be, we're hoping to see some balancing act overall. And then this gives you the more granular backdrop. So floating storage has stabilized right around these levels. And when we look at just total oil in transit, you can see that it's continued to come down as you saw some tightening out of the UAE, out of other parts of OPEC. But we're starting to see that not really get this big increase to the upside, but just flatline and start to drift higher, driven mostly by Europe and largely by Libya as well, as West Africa sees kind of a mix of where things are going overall. Looking at the North Sea, again, we expected to see a big increase in floating storage. Here we have a natural decline. We think that this is going to have another increase overall. The question is going to be, when did these load, and can they get a buyer overall? Because if not, it will sit in the area, and that will increase the total floating storage. So we could see just kind of a sideways movement, but it's something that we think is going to drift to the upside over the next few weeks as demand continues to diminish, specifically in Europe overall, and Chinese buying, I think, is mostly been baked in at this point, and they remain problematic. This is the bigger one. When we look at West Africa, we've been talking about a big increase in West African storage. We're starting to see it more now. The initial one, the previous few weeks, we did see some sales in spot, but those have mostly been whittled down. And now we're seeing new floating storage out of Nigeria and Angola. Angola had some deferrals. So again, we've seen some deferrals from month over month, which is also putting some more in storage. But this is something where we think it's going to continue to trend to the upside as that demand remains problematic. And Nigeria looks to cut OSPs, which we covered last week, where we had OSPs getting cut, trying to move some of the additional volume. The issue is, again, a lot of this Nigerian crude typically also goes into Europe. Europe's cutting, Libya's increasing. So the question is, where does this shift really end up? Especially as Brazil has seen a big increase of shipments into China, which is going to push back some additional Angolan and West African and Nigerian flow overall. Middle East storage is one that we continue to see drifting upwards. It's one that we've been talking about. This one looks a little different because we wanted to show how strong 2016 is versus the other years. And again, we're not getting to those 2016 levels, but you can see that this is what we've been talking about with these drifts higher, where there's just more and more floating storage just in the Middle Eastern markets, just as that demand problem continues to intensify, not only local demand, but also just where their products are actually flowing into. Again, Europe is one that we saw a big increase in storage. There's a little bit of a drop down, but just given where things are going overall, it's one that we think is going to remain, either at the top of that range, or it's more likely going to increase to the upside, setting those records. When we look at Asia, just to put it into perspective, that we have seen draws, but you have to understand how far we are from a quote unquote normal market. It's one where India remains the bright spot. So India has seen increases in runs from about, let's call it 76% to about 85%. The festival season is here. We will see additional pull through within India itself. The question is, we've seen cuts in Australia, which has put more Malaysian crude in the market. We've seen cuts out of China, as we talked about with the SOEs, which is going to put more crude not only in floating storage, but onshore storage, which is going to kind of keep us within this fairly tight range that we think is going to kind of hang to the side. And when we look at just total product storage, again, we haven't seen increases because we're literally running out of room, and we're just kind of sitting at the top of this range as Singapore storage continues to remain problematic. Ultra low sulfur, very low sulfur diesel increases week over week over the last 4 weeks, which again speaks to why we think Fujairah is going to see a little bit of a slowdown in terms of some of those draws, as we see some of these buildups in key shipping fuels, especially as we look at Singapore. Europe comes out next tomorrow. We covered it last week. We think that there's going to be additional builds across the complex. Gasoline exports will continue to drip out into the market, into the U.S., where we think gas oil and obviously jet fuel and kerosene is going to see additional builds within the European markets. So thanks again for watching. If you have any questions, please leave them in the comments. Love the back and forth. Love hearing what people are thinking, what the views are. This week we have our economy show. We have a Turkey show coming out looking at the Mediterranean conflict and what does it mean. And then obviously everyone's favorite, the Primary Vision Frac Spread Count. So thanks again for watching. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network.